Hello, good morning. Subramanya here. 31st March. For most people, it is just another date. Whereas for most traders, accountants, and businesses, most of the traders, it is the important night of the financial year. Bills are on the table, laptops are open, GST portal is loading, and whatnot. A trader once asked his accountant, "Today, what is the important work we have? And is it about GST or income tax or accounts closing?" This was the question. The accountant smiled and said, "Sir, before opening the laptop, let us open the go down. Let us go down to the go down." They walked into the warehouse and started counting the goods. And what happened? The accountant asked the simple question, "Sir, books ಅಲ್ಲಿ ಸ್ಟಾಕ್ ಎಷ್ಟಿದೆ, ಗೋಡೌನಲ್ಲಿ ಸ್ಟಾಕ್ ಎಷ್ಟಿದೆ?" Because first rule of business is simple: opening stock plus purchases minus sales must become the closing stock. Then he added another important point. What is that? Input tax credit as on 31st March, whichever year, should be proportionate to the stock you actually have. At the time of financials, you will show some stock. But what was the input tax on 31st March? That should be proportionate. If ITC is very high but stock is very low, it raises a serious question, isn't it? Under the Central Goods and Services Tax Act, ITC is allowed only when goods are actually received and used for business. Otherwise, department may suspect bogus purchases or fake ITC. And one day, a notice may arrive under Central Goods and Services Tax Act, Section 74. That is for bogus transaction or ITC. That is why 31st March is not just important closing of books date. It is about ensuring books, stock, and input tax credit, that is ITC, tell the same story. Now, let us quickly see some important compliances for the trading community other than this input tax credit and ITC. First and foremost, again the same point, physical stock verification. Take physical stock count on 31st March. Compare actual stock with book stock. Prepare a proper stock statement, product wise, HSN wise, of course, product wise means HSN wise, and quantity wise. Remember, your ITC should be supported either by stock or by sales. Second, ITC versus stock. Ensure that ITC claimed is proportionate to the goods you actually have physically. Okay? If goods purchased are sold or available in stock, ITC is justified. If goods are purchased or sold or available in stock, then ITC is justified. If goods cannot be traced, questions may arise later for sure. Third, GST reconciliation, very important. Match the following, very important: sales register with the GSTR1, tax paid with the GSTR3B, purchases with GSTR2B. This ensures your GST records are consistent. Fourth point is income tax checks, all related to GST only. Estimate the yearly profit based on the turnover, based on the industry standards, based on your company or firm. Pay pending advance tax if required. Complete any tax saving investment before the year ends for proprietors. Okay, even for salaried, but here I'm mainly talking about businessmen. Fifth one, labor compliance. If you have employees, verify PF contributions, ESI payment, professional tax deduction, instead of mentioning it in the balance sheet payable. Of course, 1 month will always be payable. If anything else is there, you can pay. Sixth one, accounting closing, complete bank reconciliation, confirm debtors and creditors, provide depreciation and expense provision, ensure proper stock valuation. Seventh one, the most important one from tomorrow, fresh invoice series from 1st April. From 1st April, it is advisable to start a fresh invoice numbering series, with the prefix of your business name. The invoice number should be unique and preferably reflect the identity of the firm, not just like 101, 001, 002. No, it should be prefixed with your firm's short form. This requirement flows from Central Goods and Service Tax rules, rule number 46, which requires a consecutive serial number unique for each financial year. Starting a new series from April helps maintain clarity and compliance. And here is the final message to the trading community related to this small topic. Dear traders and business friends, compliance is not about fear of notices. It is about keeping our businesses transparent, organized, and strong. If our books, stock, and GST record speak the same truth, there is nothing to worry about. Let us close the financial year responsibly and start the new year with clean and correct records. Because in business, ITC in the books should always be supported by the stock in the warehouse. Thanks a lot. Bye bye.